Good day, ladies and gentlemen, and welcome to the show. Glad to have you here on this 26th, Monday, the 26th of April, 2021. Thank you for tuning in. Now, listen, guys, and I'll tell you my logic on why I think the Fed is going to try to do some sort of a little tightening, maybe. And I'm thinking of in about 90 days from now, but it might be as long as 180 days or 6 months from now before they try it. I'll tell you, they're going to see inflation. It doesn't matter their metric. I know their metric is all way off for the CPI, and the real inflation rate is really running much hotter, and but that doesn't matter. Even with their metric, it's going to start to really go up, and they are required to do their job, and their job is to maintain stability. The Federal Reserve's job is to maintain stability in the markets, and oversight. That's their job. Now, if you saw something happening and it was your job to do it, and would you stand back and not? They got to go through the basically what I'm saying is here. They got to go through the steps required, and Federal Chairman Powell has already stood out and told you that they're not going to let inflation run away from them, and he said that they have measures. He didn't elaborate too much on what the measures are, but we all know what their measures are. Their measures are to raise rates. That's their job, is to stabilize and keep things stable. So when they see inflation starting to run away in the next 3 to 6 months, they're going to have to go through the steps or procedural thing of what they have to do, is basically their job. So at least they can stand back and say, well, we tried. I think they already know it's going to fail. But they have to go through those steps or procedures. It's just like anything, I mean, if you park your car in the wrong place, they're going to come and tow it away. They're going to go through, the people that do that job are going to have to do their job, and they're going to have to go through those steps and procedures. So basically, that's what I see ahead, is the Fed following through on these steps and procedures to try to cool down inflation. But when they do it, the outcome is probably going to be like a 25% market correction in a very short order, because the market really wants to fall 80-90% to find true fair market value. We can't allow that to happen. Nobody can allow that to happen. The Fed can't allow that to happen. The world can't allow that to happen, because the world would basically shut down at this point in time, because businesses, everything is just so over leveraged, it can't withstand 80-90%. But I think it can withstand a 20-25% correction. And that's what we're going to probably see. And when we get down to those levels, 20-25% in a drop in the markets, then the Fed is going to react to try to stabilize things in the opposite direction. So first they're going to run one way and try to repair the overheating inflation. And when they see that's not successful, then they're going to back off and go back in the opposite direction to try to restabilize the markets in the opposite direction. When that happens, that's going to be like a watershed moment for gold, silver, cryptos, everything, is when the Fed changes direction again. So first they're going to try to cool out inflation, and then they're gonna reverse that action because they've realized they've made a terrible mistake. That's what I think we got coming in the next 6 months. Probably, maybe even less. It could occur even less, what I'm talking about. And anyway, let's get on. Let's open up the charts right here and take a look at what's going on in the markets today. We're seeing the silver price at 26.11. It's up 14 cents on the day so far. When all of this occurs and we get a correction in these markets, a rather steep correction, I'm expecting 25%. I don't think it's going to affect the price of gold and silver that much because gold and silver are sitting on the bottom. I really don't. I think cryptocurrencies will be hurt by it. It could be hurt really bad by it. The market will get hurt, everything else. But I don't see gold and silver losing massive amounts of I don't see a very big downside risk to gold and silver. Because they're already down near bottom right now, considering the amount of inflation out there and how much prices have went up, especially on things like lumber and things like that. And the silver price is still sub $30. You know, I don't think that there's a whole lot of movement to the downside. Otherwise, they'll undercut mining production costs. Anyway, looking at silver today, we're looking at 26.11, and the price is creeping upwards. Take a look at gold, 17.78 today. It's up $1.70. Now let's take a look at crypto. Crypto's been rebounding, but I told you that's kind of what I expected in yesterday's show. I told you I didn't think that crypto was in the bear market right now. It's still in a bull market. And it'll stay in the bull market. And if this correction in the markets come of 25%, like I think's coming, we'll see a reversal. We'll see cryptocurrency change from a bull market, which is in right now, into a bear market. And it could very well be at all-time highs when that happens. You know? And so that is going to really put a damper on the enthusiasm of cryptocurrencies for a while. It will. The next big bull market. I don't think it's out there as far. Do you remember how long we had to wait between the bull market where it went up to 20,000 and then fell off to what, like 3,800 or something? It went way low. First off, I don't think we're going to have to wait as long a period of time like the period of time we waited between the 2017 bull market and the 2021 bull market. I don't think we're going to have to wait that big long period of time this time. I think the next bull market will be quicker. And I don't think it's going to go as low. If you can do the comparison of percentage of drop, like it dropped from 20,000 all the way down to sub 5,000. That's over 75%. I don't think we're going to see that big of a drop next time of 75%. I don't think we're going to see a 75% drop. I think maximum will be 50%. And the next big bull rally in cryptocurrencies is going to be the biggest one yet, I think. The next one, looking out maybe a year or two into the future. They tried banning cryptocurrency in Turkey. Never seen so many people doing searches on Google for cryptocurrency in Turkey. Everybody wants it. That's the way. That's human mentality. If you ban something, everybody wants it. I forget what country it was, but a long time ago, they banned coffee. And they opened up these little cafes and everything where everybody, it was serious. They would lock you up, put you in jail if you drank coffee. Some country did that or something. But everybody opened up these little coffee. Well, y'all remember what happened in the United States when they banned alcohol during what was called Prohibition, the Prohibition era. Alcohol sales were never so strong. They were opening up what's called speakeasies all over the place, and they'd all be in there boozing it up, having a great old time because it was banned. They all wanted it, It's very interesting, human psychology. Anyway, we're going to move on here, and we're going to take a look at the Dow Jones today. It's up 20 points today. It's not a big gain, 34,063. Take a look now at crude oil, $61.89. It's off just a little bit today. India is undergoing problems right now, and this is affecting the price of crude oil. Let's take a look now at the MOVE index. 59.98 on the MOVE index, and the MOVE index is going up just a little bit, just a tad. But the MOVE index has been under control really good lately. Take a look at bonds and rates. We're looking at the middle of the yield curve rising, long end falling, short end falling, but the middle is rising, but it's not really big. Looks like the biggest is on the US 3-year with a 1.4%. 1.4 basis points. 1.4 basis points. US 30 years at 34.39. US 10 years at 1.57. And we're looking at a US 30 year at 2.24 today. Let's take a look now at the dollar index. Dollar index is 90.89 today, and it appears to be rising very slowly today. But the dollar, the whole thing is in now on the dollar, you know. And if we do get this little thing where the Fed were to say in the next 90 to 180 days, we were to get this little thing where the Fed were to try to tighten, that would really push the dollar up during the period when they're trying to tighten. Once it's proved that it's a failure, then we're going to see a massive drop in the dollar on the other side of that. So, could see a rise in the dollar and then a massive drop later after. It's kind of what I'm expecting, you know. Thank you guys for listening to my show. Like and subscribe. Hit that notification bell icon, you know, when you subscribe, so you can get updated on when I'm downloading into the internet or uploading into the internet. And we'll catch you guys in the very next show. Bye-bye.